the broader consolidation from beginning of August. So we are talking about 1.5 month consolidation of the broader downtrend from 85.50. So loss of 76, 75, 93 would trigger a fresh bear phase. However, I need to remind you again that Bank of Japan's possible action in order to prevent further strengthening of Japanese yen is still pending, and it's quite likely at this point. So it's not actually ruled out. So we might see action in order to protect the Japanese yen from a further strengthening and protect of breaking and posting the new record lows. So at this point, I would say the downside remains quite well protected. That's why the pair remains within a very narrow range and directionless trading. However, break either way would define the further direction of the dollar yen. The dollar Swiss is still in the corrective consolidative mode with the 90.00 as the main support, still holding the dips. However, the negative signal was yesterday's upside rejection at 91.41 when the pair was en route to test 91.80 and 92.00 our targets, and immediate pullback returned back to 90. At this point, holding above 90 keeps the immediate bullish outlook in play, and break above 91.41 to open 91.80, 92.00 as initial targets, and then we have 93.38 as the next level. However, there is still risk as the hourly outlook and 4-hour holds below the 20 days moving average. That keeps pressure to the downside, with potential loss of 90 as our initial strong support, likely to risk further correction down to 89.26, 89.00, our next downside targets. However, the outlook for a broader picture of dollar Swiss remains firmly bullish, as we could see on the daily chart, after breaking some significant levels such as 200 days moving average and the main trend line resistance, but also is in overbought territory. That is putting some pressure, as well as other studies quite extended, as we can see on MACD, and losing momentum as the momentum is moving towards its midline, would signal some stronger correction to the downside. Commodities are in corrective mode after suffering heavy losses, starting with crude oil that dipped to 77.12 yesterday. This was the fresh low of yesterday, and immediate bounce actually cleared our initial resistances at 81.60, 81.75, regaining 82 level, currently 82.50. And significant at this point that fresh strength cleared the 38.2 Fibonacci retracement of the 90.57, 77.12 decline. That opens way for a possible further action higher. Currently we have the market above 20 days moving average with 9 and 14 days. Actually 9 days is now attempting to cross above 14, with potential cross higher to support this movement. Momentum is already above the midline, while the MACD is heading higher, and the RSI is still pointing higher. So we might see some further corrective action. However, on the upside, strong resistance comes at around 85 zone. That was previous resistance. Now previous support now reverted to resistance. Actually, initially it's 83.20, and then we have 85 zone as the key, which is also near 85.42 days, 61.8 Fibonacci retracement, and this is actually expected to cap and resume a broader downtrend of crude oil. The only the regain of 88 level, I would say this high here would be more positive for the instrument and would signal some stronger recovery. However, the key barrier on the short term is at 90.57, and the break here is required actually to resume higher. Just before this we have 89.70, 89.90 day main trend line resistance, and the 55 days moving average currently at 89.30. So between 89 and 90.60 we have some strong barriers that need to be cleared in order to open way higher. For the time being, the outlook remains more negative for the crude oil. Also for the gold, after hitting fresh low at 1532 yesterday, the yellow metal is currently trading in the corrective mode. It's important that loss of key support at 1720 opened way for a very deep, very strong reversal that erased so far 38.2% of the broader up move from 905 up to 1920. At this point, there was a strong support of Fibonacci support as well as 200 days moving average that for the time being contained the dips. However, on the, I think we can see it. Based on the wave principles, the likely scenario would be return down and the test of 1532 low, as the recent phase lower hasn't completed yet the 5 waves. We can have one, we can see 1, 2, 3. This is fourth one, so the fifth leg of the fifth wave should point lower and actually retest of open the way for a test of 1532 yesterday's low. This is based on the wave principles. On the upside, immediate dynamic barrier comes at 1676, which is 20 days moving average, and basically the gain of this level would turn outlook more positive. The studies, MACD and the momentum are well extended to the downside and started pointing higher, so we might see some stronger correction. However, based, as I mentioned, based on the wave principles, the fifth wave hasn't been completed yet, and the likely scenario would be revisit of 1532 yesterday's low.